Hello darkness, my old friend. Crypto endures the week from hell as Bitcoin crashes below last cycle's all-time high and sentiment goes from bad to worse. The one to watch? Everyone's talking about the ISM numbers being the best indicator of where crypto could go next. So, what are they, and what do they tell us? Beating the bears. With crypto struggling, AI running dangerously hot, and metals cooling, where else is good to invest at a time like this? We examine some sectors that could do well in the months and years ahead. And a look at last week's top performers, tweets of the week, America's finest TA, and much more besides. This is the Coin Bureau News, live.
GM, happy Monday and welcome back to the Coin Bureau Weekly News live stream for another amazing week in this wonderful cryptoverse. How are you doing, Guy?
I'm all right, thanks, Nick. I'm all right.
Did you like the intro reel?
I did. There was those photo shoots were great fun to do.
Yeah, they were indeed. Yeah,
I liked us as potatoes, actually.
Genetically modified guy.
I wasn't really expecting that one. Maybe we could have us as different types of vegetable or
who came up with that idea? I mean, what would you have thought? Like, we're just going to make them a potato? Like, okay,
I think this is just AI. This is what AGI
just
is
having
like.
Fun with us, yeah.
Yeah.
Anyways, guys, welcome back to the Coin Bureau Weekly News. We've got a lot to cover this today. Of course, looking back on the week, we hope we could forget. It was quite a shocker, and we'll be taking a look at that in terms of what happened, why it happened, why we had that massive crash below the previous all-time high.
Oh, don't, Nick, don't.
The previous cycle all-time high, not even the previous year all-time high.
That was
yeah. So we'll take a look at of course that, and then of course another thing, the next M2 indicator for this cycle, the most important altcoin season indicator, is now no longer the M2 indicator; it's the ISM.
Okay.
The ISM numbers, yes, everyone was pointing to that as the most important factor to watch last week. So we'll be talking about that and why it may be a bit misleading. And then, of course, with crypto struggling, in a bear market right now, where else could there be rays of sunshine? Where are we pivoting to next?
Where are the good times? Where can we find the good times? Yes, we'll be talking about some alternative asset classes that you can invest in, and of course, given the way tokenization is going, you'll be able to do all of this on crypto rails before very long. So it is relevant.
It's still crypto related
to us as a crypto channel.
Yeah.
But Nick, you've signalled with your Hugh Hefner outfit.
There we go, man.
Quite how you feel about the market at the moment.
Yeah, not in a good mood, man. Yeah, markets bleeding red. Also, it's the last few days of winter here in Dubai, so I'm going to try and enjoy wearing something nice, warm and comfortable while I can before it starts getting slightly warmer to the temperature of the surface of the sun.
It is already heating up. Now, folks, if you hit the like button, Brett, ever reliable Brett in the comments was saying, rumour has it that if we hit 1,000 likes, Guy's going to send every person who has liked a t-shirt and 5 lucky people a flight ticket to Dubai to attend his secret bear market party when we hit the bottom. Brett, if you tell everyone about it, then it's not a secret anymore, is it? You absolutely blown it. Brett, your invitation to that party is rescinded. But yes, hit the like button and I will at least consider the t-shirts.
I would just love to imagine what a secret Guy bear market party would look like.
Trust me, Nick, you don't want to know.
At the door, the $5 wrench attack as Guy tries to make his way in crypto.
You don't understand. It's a bear market. There is nothing. There is no token. I love you. Okay, cool. Let's kick off and have a look at last week in Bitcoin. Let's get it over with,
Let's get it over with, man. Okay. So if you will recall, we started Monday off with a massive crash in Bitcoin below 76K, which now, in hindsight, is our new target.
Come back 76K, all is forgiven.
Oh, if only we could go back to those days. Anyway, 76K, this was crashing on the news that the US government was shutting down on Saturday, and it took a bit of a delay, but Bitcoin did eventually catch up and collapsed on Monday morning. Sunday evening, Monday morning, and also per usual, this would open up a CME gap. It was a large CME gap. We talked about it last week, one of the second largest ever, and it still is up there. We unfortunately did not come back and close it.
Still unfilled.
Still unfilled, man. There we go. Then, as you recall, last week, as I talked about at the beginning, we were alluding to these ISM numbers. These are the ISM manufacturing numbers, which we will get onto in the next section. But yeah, this was above 50, which signaled there was an expansion in manufacturing.
Mm-hmm. So that takes us to Tuesday, and joy, oh joy, metals started recovering.
Yeah, it's great. And one could only hope that Bitcoin and crypto would follow suit, right?
Yeah. I mean, surely, metals, and then we get the rotation out of Bitcoin.
Losing the will to live, just basically staircase. It just is an elevator down, staircase up, elevator down.
Horrible. And this took us to a new yearly low.
Starting the year off on a bang, bro. 73K. Good news, though. The shutdown did end.
Okay.
Yeah.
Okay. We've got to take the positives from
Some
this.
positive, yeah.
So the government reopened, the US government reopened to start doing whatever it is they do.
Yeah.
That takes us then to Wednesday. This was when the ADP numbers came out, and they were below expectations.
Below expectations. And we also had data and from the survey, the Challenger survey. And this is a jobs survey. And they basically, it was disclosed that it was the highest number of layoffs at the start of the to start the year since 2009, which is crazy. Obviously, that takes into account, for example, Amazon. For example, they
laid off tons of people, didn't they?
Tons.
All while, and then also announcing that they're investing something like 200 billion into AI.
Yeah, 200 billion into AI.
So they can lay off even more people.
And 50 million, or Bezos 50 million into the Melania movie. So, money well spent.
Meanwhile, he's also cutting jobs at the Washington Post.
Oh, yeah, exactly. And leaving reporters in the middle of war zones having to crowdfund via GoFundMe to get back.
Yeah. Jeff Bezos, he's not a very nice guy, isn't he? He kind of feels like he should be in crypto.
Okay.
Come on, Jeff. I think you might have found your
jaded.
I know.
Okay. Anyways, that brings us to, how did Bitcoin react to the bad jobs numbers? Well, as it usually does, just completely collapses. And it kept on falling. And you thought the selling was over? Well, guys, let me tell you, the sellers are not getting exhausted.
No. And then it just kept getting worse. We broke below 70K.
70K, 74, 72, 70K. We even wicked overnight to just above 60K.
Oh.
I mean,
I'm so glad I was in bed for that.
Me too. I can't imagine what I've been. And thankfully it recovered in the morning, because it wasn't so much of a heart attack when I looked at the price. It was still a shocker, but
yeah.
And that was a massive crash. And if at the worst time possible, talk about timing. Thursday was when Strategy had its earnings call.
Do you know what though? Like I was thinking about this, and I sort of thought, God, that must have been a hellish call to do. Like, if you're Saylor and the rest of the strategy C-suite. And then I thought, do you know what? If you're on a strategy earnings call, you are probably a massive Saylor stan. I mean, these are the hardcore people. They would probably even more frothing at the mouth.
They probably had that scheduled for weeks in advance. They were sitting there behind their TVs, with the popcorn and everything, getting there.
Don't sell, Michael. Don't sell. Hold firm. Hodl.
Anyways, this is pretty interesting. This is the state of the timeline at that moment. And I thought it was quite funny because we posted a meme from Titanic. If you guys remember the scene when they are playing the violins as the ship is sinking. And gentlemen, it has been an honor playing with you tonight. So that's kind of like how crypto timeline felt last week. And at nearly the exact moment, Saylor puts out an AI generated image of him on a floating as the Titanic sinks behind him.
Was the Titanic also on fire?
No, but this is a very good analogy for the Bitcoin and crypto markets, because just sinking is not good enough. It also needs to burn in hellfire.
Oh, what multitasking, man. Okay, so come Friday, there are a lot of theories going around about what caused this meltdown.
So one of the first that came out that seemed to get quite a lot of traction was this theory that there was some sort of a Hong Kong TradFi hedge fund that had actually been taking massive losses post 1010, and they tried to make it all back, as you usually do, trying to catch the metals trade, and then they also crashed out on that, and then they got wiped out because of an over-leveraged IBIT options margin call. That was one theory. Another, although Jeff Park, who is quite a well-known options guy, he's also used to work at Bitwise Asset Management. He had a lengthy post, which I kind of summarized here. It was It's easy to point to one particular bad actor or one particular fund blowing up. It's an easy, quick explanation, but there was a lot more going on. There was violent moves that were driven by positioning, hedging, and just forced rebalancing of portfolios. And it all resulted as a result of crypto integrating with TradFi, because you don't only have the IBIT ETFs, you now also have the options that are attached to that. And one other explanation of what happened here, and speaking to that, is from Marcus Thielen from 10x Research. And this is what dealers, if you're an options dealer, you have to hedge out gamma risk, right? And the dealers are counterparties to the buyers. And if you have large negative gamma around the $75,000 strike level, which is where Bitcoin was, this large negative gamma means that they need to hedge in the same direction as the price is moving. So if price is moving continually down or lower and you've got a negative gamma, the dealers actually need to short that gamma, and therefore they're required to sell Bitcoin to hedge out that risk. So that's one of the explanations.
On the pain.
It piles on the pain, exactly. But either way, Bitcoin managed to catch a floor with tech stocks rebounding on Friday evening.
Okay, so we closed a pretty awful week on something of a high note, if you can call it that. And then it was a fairly sort of quiet weekend, kind of sideways and down. The big news over the weekend was Sanae Takaichi winning a landslide in the Japanese election. Now, we put out a video on this on Coin Bureau Finance, didn't we? And we were talking about there how, this was a bit of a Hail Mary from her, wasn't it?
It was, but it paid off. It paid off that she got a big majority, and there's lots of people who are very excited about this because she's now going to fiscal stimulus in Japan, reinvigorating the Japanese economy, monetization of the debt that BOJ is going to print, the Japanese stocks ripped. So that's what happened overnight. So now what's coming this week? So interestingly, we've got, because the government was shut down, the delayed NFP numbers are coming this week as well. And this is in the same week, we've also got the CPI numbers coming out. So these two are going to obviously be very important in terms of determining where Fed policy could go. Just quickly looking at the charts, I pointed to this chart last week. The weekly chart is wild. So you can see there how we fell below the 100-week moving average. We fell below the gap was left opened. The price last week fell all the way down past the initial election price. So we basically round tripped all the gains since Trump got elected, not inaugurated. We fell through the previous all-time highs, the previous cycle all-time highs, and came incredibly close to touching the 200-week moving average, which is the target many people have been pointing to. Although thankfully we did bounce, and we just closed above the week. We closed above the previous cycle all-time high. And we're at that point right now. So we really need to close and hold above this level this week. And there is still hope because there is that CME gap up there. But, it's quite hopeful.
Still, yes, that is. That's a tough one to close.
That's a tough one to climb.
Maybe that's the sort of one that we'll be talking about in about 6 months' time or something. It's like, oh, by the way, that CME gap. Do you remember that?
Yeah.
Finally closed.
But we first need to go and close the one down at, I think, 3,000 or something. No.
We don't talk about that one. That's the Voldemort CME gap.
That is.
We've also got news coming in as well. We can double check this, but strategy Saylor is buying again by the look of it.
There we go.
$78 million worth.
Nothing stops him. He's still going. Quickly, one more chart I want to show you guys. This is also interesting from a momentum perspective. Now, what this basically shows is the days with which Bitcoin trades below, on a weekly chart, trades below the 100-week moving average. And I've mapped this out going back to 2018, and it shows that generally, once Bitcoin has fallen below the 100-week moving average, it tends to remain there for an average over about 200 or so days. And the shortest time that it has remained below the 200-week moving average was back in 2020, with the COVID crash, when it was for 34 days. And currently we're at about 13 days or so that we've been under the 100-week moving average. So what that basically means is the longer we stay down below that price, below the 100-week moving average without a snapback, the more likely we are to remain down there for some time and go and touch that 200-week moving average much more below at about 58 to 60K. So that's interesting as well.
We've just got to ride it out, Nick.
Got to ride it out.
We've just got to deal with it. If, look at that chart. You can see the general direction of travel, but there are bumps in the road along the way. So people are dealing with it in the comments fairly well. Yikes, we're in for weeks of pain. Well, yeah, possibly, but this is where diamond hands are forged. Rusty Lantern, I think, is echoing a lot of sentiment. Watching from under my bed, holding my ledger, hiding from all the monsters outside. Good call. Good call. Did you see this in the news? Someone sent BTC to Satoshi. I wonder what the thinking there was.
I don't know.
I wonder whether they were sort of trying to provoke a response.
Is Satoshi running a giveaway scheme? You send 1 Bitcoin. That's
Hi. This is Satoshi Nakamoto here. If you send me 1 Bitcoin, I will send you 10. How are you? Are you warm in that jacket, Nick?
That's okay. It's not too hot.
Okay. They're speculating that you might be a little bit on the sweaty side.
Do I look sweaty? No, really?
No.
Hopefully that's just the lighting or something. I told the production team that's the worst. The cardinal sin is to make me look sweaty or shiny. But if you,
yes, go on.
Oh, well, I mean, I'm thinking if these guys are thinking of trading these markets, these volatile markets, then there's no better place to do it than on our first brand partner, which is 2BIT. They're a top-tier international exchange, and they have a solid interface, deep liquidity, competitive fees, and onboarding is super simple. All you really need is an email address. You go and create an account by scanning the QR code or hitting the link down below. Go and create an account, simple as an email address. Once you have an account, have a play around, see if you like the interface, if you want to trade there. And if you do and you deposit, there is up to $90,000 in trading rewards, as well as an immediate VIP level 1 upgrade, which gets you 50% off trading fees for life.
Nice.
So yeah, go and check it out, guys. 2BIT.
Absolutely. Thanks to 2BIT. Okay, now, if you've been on crypto Twitter this week, you must be insane. What on earth are you doing there? But you may have seen a bit of back and forth about ISM. Now, if you're not familiar, never fear. We are going to talk you through, because this, as Nick mentioned at the top of the stream, this is the new M2 money supply. This is the new metric that we're all pinning our hopes on to take us to the moon. So we'd better start by explaining exactly what the ISM is and why it matters.
Yeah, we will. But first, and as you Benjamin Kyle alludes to, it's this year's versions of the Bitcoin follows M2. Mm-hmm. So the ISM Manufacturing Index is basically an index. It's done by a survey by the Supply Chain Management Institute or something, and this is basically is an indication of expansion or contraction in the manufacturing sector, and it's been contracting for the past few months on fears about tariffs and all that kind of stuff. And many people were pointing to we need to see some sort of an expansion in manufacturing capacity and expansion over the next few, if we're going to see any sort of recovery in the economy. And sure enough, we saw on Monday last week that we got the reading above 50, which this is an expansion. It was the highest in 2022. So as usual, everyone on crypto Twitter was excited about this.
Clutching at that particular straw. Obviously, 2022 coming out of the pandemic slump. So, I mean, that is significant, the fact that US manufacturing is putting up. And obviously, this is something that Trump has talked about a lot. He wants America to go back to making things. And yeah, a lot of people see this as a kind of, I guess a sort of proxy for consumer sentiment. Exactly. Yeah. Well, I mean,
manufacturing capacity. Yeah. I mean, consumer sentiment will come eventually, because if you have additional manufacturing, this means that the economy could be growing and the manufacturing jobs could be coming back. Although there were some nuances in the actual survey results themselves and the actual statements and comments made by people responding. But that's a nuance we're not going to dive into right now. The point is, the theory for crypto is that analysts argue that Bitcoin is essentially a high beta play on global liquidity and growth. And when the manufacturing sector expands, it typically leads to increased liquidity and a higher appetite for risk assets.
Okay. Now, we've seen these what are called PMI reversals before, 2013, 2016 and 2020. And anyone who's been in crypto for a while will know that those dates all preceded big leg ups for Bitcoin and, of course, the wider crypto market as well. However, not everyone was on board with this. As we mentioned, Ben Cowan is a little skeptical about this, right?
Yeah, his argument was he took a look, for example, at what happened in 2016 and a few other occasions, or 2014 and a few other occasions where you had PMI expansion and the crypto markets didn't react. And then someone else came out with a counter to that, saying the correlation only really started in 2016, and therefore it doesn't really count. We even had Mr. Rapal jumping in himself, basically with this interesting mid-curve meme. And it's a fair argument to the extent that if economy is doing well, crypto should do well. People who have jobs and they're going to want to spend on food or just throw all their money into crypto and become exit liquidity for someone else. I don't know. That's the theory. Okay. But yeah, I mean, and he's also a big proponent of the 50 ISM reading and why it's important. And we actually talked about this 2 weeks ago when we had him on the podcast.
So it's all liquidity, stupid. Right?
Yeah, that's it. Well, to be fair, that's the main argument. Is like, is it going to lead to an increase in liquidity? And indeed, are we going to see increased liquidity, not just on the fiscal side, but like what's happening with monetary policy? Now, this also relates to a conversation I had on the podcast channel with Michael Howell, who is a leading global liquidity expert. And it's definitely worth watching if you guys haven't already. But according to his theory, he breaks it down into different types of liquidity. You've got financial liquidity, and then you've got real economy liquidity. And these two, obviously, where liquidity flows, if it's flowing into the real economy, it's leaving the financial economy, which means risk assets and assets sell off. But according to his theory, we peaked in Q3 last year in terms of top cycle liquidity, and as a result, we started selling off in the most risky assets on the asset spectrum, and those are crypto, the most sensitive to risk. Yeah. And he maps out the liquidity of Bitcoin's price movements with the Solana and the global liquidity indicators and moves.
Okay. So what was Michael's advice then?
Well, in a regime of slowing, he's got this interesting chart which he's shared in his slides. In a regime of slowing liquidity, you should now be out of high tech, high risk equities and into the likes of commodities. Because if we're moving down his wave chart there, we're at the peak. We were at the peak in Q3 last year. We're moving down. We should be in the likes of commodities, which many people are and have pivoted to. Potentially cash then when we get out towards the middle of the year, and as we get to the bottom of the liquidity cycle, you move into bonds, etc. Okay. So that's his theory.
And do we have a kind of rough timeline on this? So can we just go back to that? Do we know sort of roughly how long that bonds, how long are we supposed to be in bonds for?
I mean, I think that's a few months. So we're talking like maybe middle of the year, okay, to the trough of the liquidity. But yeah, I mean, it's all based on the debt refinancing cycle. Right. The TLDR is that according to Michael's theory, you shouldn't be long high-risk assets right now. Although he did mention, and this is very interesting, many people in the crypto space have thought, okay, well, now Bitcoin is not trading, it's not correlated to gold. It's no longer a debasement trade. It's no longer digital gold. But he made the argument that in the short term, it has kind of diverged from that and decorrelated. But the long-term correlation with gold should still remain. And it still is a good debasement trade. And he said that if Bitcoin was trading one standard deviation away from the current price and on a daily chart, you should consider adding at 75K. Indeed, that was when Bitcoin was trading, just below 75K. So anyways, that's another angle to take from this whole question of global liquidity, economic expansion, and the interplay between the two.
Yes. And as Dre says in the comments there, it was a great chat with Michael. There are a lot of experts out there in all sorts of things. And Michael Howell, I think, is one of the few really worth listening to. He's a very smart guy. So was he a nice bloke to talk to?
Very nice bloke, yeah. Indeed. Yeah, very smart as well. And it was really eye-opening in terms of not just the factors around, how you calculate liquidity in an actual country like the US, but broadly across different countries as well. And he also has a really interesting theory about why gold has been rallying around China basically. Okay. And the fact that China has suppressed rates because of all the debt on their balance sheets, right? So they have this balance sheet recession, and as a result, they can't allow their currency to appreciate. So they have to basically, the people get out of the yuan into gold, right? And the Chinese, not just Chinese central bank, but also Chinese retail buyers are just aping into gold.
Okay.
Yeah.
So it's not just, so the PBOC and the Chinese people, all however many billion of them. Okay, interesting. So do check out that interview that Nick did with Michael Howell. All right, now if you guys are looking to keep your assets safe, then there is no better option than Tangem. The Tangem wallet is your all-in-one crypto solution. Not only does it function as a very safe and secure and easy-to-use hardware device, but you can also use it as a web wallet as well. Lots of asset support, all the stuff that you need. And if you scan that QR code on screen, you get a 10% discount. How about that?
There we go, guys. Scan that. Now, given that we seem to, is it fair to say we're in a bear market, guy?
I think, Nick,
I think
I'm going to ring the bear market bell. Have we got a bell amongst all these gubbins here? I'm going to. The bear is going to.
The bear is.
There we are. Right.
There are still a few of those Japanese soldiers on the islands on the timeline who think that altcoin season is just around the corner with that PMI number. But I think it's fair to say we're in a bear market, at least for crypto. Now, this then brings up the question of how are you thinking about asset allocation in a crypto bear market, and what other asset classes are you looking at? And I just wanted to gauge sentiment, get a bit of a community poll out last week, and I asked a few people. So what other asset classes and assets have you invested in? And there was many answers. Some were like metals, ETFs and infra. Defense and space stocks, good ones.
Interesting.
Many replies saying they didn't know that other asset classes existed beyond crypto, to which I had this meme. Yeah, guys, you can fly out anytime.
Just,
the cage is all I know.
Just allow yourself to take flight, but keep watching us. Yes. Okay. So there's. I think diversification is the name of the game. At the moment.
Do you hold stocks then?
I do hold stocks. Yeah.
Okay.
I get someone else to invest on my behalf, not my wife. But we
have to clarify that.
I mean, she would probably do a better job than me. So I hold, I do hold stocks. It's fairly kind of safe, but there's gold in there. I did persuade the guy to go in on uranium.
Okay.
And it promptly went up big time, and I was feeling like an absolute genius. And then it.
Was it like how you get an exposure to that? Is it through an ETF? Is it
through the ETF? Through the URA ETF, which if you saw our uranium video, I think we talked about it there. That's sort of exposure to the actual metal and the miners and refiners as well.
Oh, okay, cool.
It's volatile, but then if you're in crypto, that's what you live for, right?
Yeah, for sure. And then if you're talking about like interesting sectors, though. Defense, some have mentioned it in the response to that. But if you think about like sectors that are spending a lot, and if you also want to play on the manufacture and expansion, but then also in the most bullish sector there is, they call the defense super cycle, that is defense stocks, and how much these have rallied and how much defense spending is going to run hot in the next few years. And just because of many, obviously the most obvious reasons, what's going on in Europe, but then also the nuclear arms race between Russia and the US now with the lapse of the non-proliferation treaty. So that's another sector to look into. And then also miners, like actual physical miners, copper miners, and like the likes of Rio Tinto, Billiton, all that.
Glencore, yeah.
Do you hold positions in miners apart from the ETF?
I think I've got a miners ETF as well. But it's that because when you look at the metals trade, it can be so, there's so many options and things, and you think, well, okay, is it going to be copper this week and, zinc next week or something like that? Whereas if you're sort of invested in miners generally, as far as I understand it, there aren't that many miners that are very, very specialized. So the likes of Rio Tinto will be pulling all sorts of stuff out of the ground. Like you do get some sort of specialized gold miners and some sort of specialized lithium miners and things like that. But I think, a lot of these big mining conglomerates are mining all sorts. So if you get, you can get exposure to them. And that gives you sort of wider metals, commodities exposure.
Well, to be fair, many metals, nearly all metals have been rallying, right? Like copper, uranium,
palladium,
as
Ben has platinum, reminded us many times.
So diversified miners may not be the worst choice.
Yeah. And of course, like with defense as well, you recorded a video earlier today about the fact, I don't know if you guys saw this last week. This is a little on the terrifying side. The doomsday clock is now at 85 seconds to midnight.
Yeah.
And this is because a nuclear non-proliferation treaty between the US and Russia has just expired.
Yeah.
And we won't go too far because you can watch the video. It's coming out soon. It's going to be great. But basically, we're moving into a much more dangerous world. China is trying to build up its nuclear arsenal. America is trying to modernize its. Russia is, trying to develop its as well. And in that sort of world, and then you get like Germany taking the debt break off in order to buy, in order to refund defense and what have you. It's very hard to see how defense stocks aren't going to go up.
Yeah, also coming back to the NATO target was adjusted up to it was previously 2.5% of GDP, and I think it's now NATO target is 5% of GDP. That's a massive jump, and I think in Europe now Europe is expecting to spend over 400 billion in defense over the next few years. So I think that's the real super cycle, the defense super cycle.
Yeah,
it may end up with our eventual demise in a nuclear winter, but at least you can make money on the way up.
At least you'll be able to afford iodine tablets and water purification and handguns and whatever. I mean it's a tricky one, isn't it? Because I know a lot of people will be sort of ethically opposed to investing in defense stocks for, I guess you don't want. Some people would object to sort of funding that sort of thing, which is kind of fair enough, really. But do you want to be right, or do you want to make money? I guess
exactly
is what it comes down to. But we are moving into this much more dangerous world. So it kind of makes sense. Whether or not we're going to see tokenized defense stocks anytime soon, so we can buy them on chain.
I think we should. It's not hard to do it. You just tokenize it on Solana, Superstate. There we go. Raytheon on the blockchain.
Yeah.
There we go.
Okay, you heard it here first.
But if you guys are looking to trade tokenized stocks or commodities on a crypto exchange, then there's one way to do it. It's very super simple. It's super simple. All you can do is use BitGet. This is our second brand partner. Now you can basically go over there and you can trade all types of. You could just swap your Bitcoin for tokenized gold and tokenized stocks. First of all, if you don't have a BitGet account, you can sign up right now, scanning the QR code on the screen or hitting the link in the description. And then you can there trade directly with your USDT up to 500 times leverage on gold and other stocks.
Okay.
And enjoy deep liquidity and low slippage. And also you can avail yourself of up to $50,000 in deposit bonuses on BitGet as well.
Absolutely. Okay, right. It is time for a bit of TA now. So we got something a bit different for you this week, but we're not going to tell you what it is. So let us know.
It's an Easter egg. Let us know, guys.
Aaron scans the charts, trend lines tight and true. Full of berries, TA tells exactly what to do.
Hey guys, Aaron here from Coin Bureau Trading, providing a quick technical analysis update for Bitcoin, Ethereum, and gold. First off, we know that there was a massive drop and a pretty interesting rebound that happened last Friday. The price of BTC dropped down to $60,000 and then it shot up about 20% to 71K. But the big question you're probably wondering is, why isn't Bitcoin just shooting up a lot higher? Well, the reason for that is because everything is super macro bearish, and it's not just the trending breakout indicator. It's also on balance volume. It's also a huge decrease in volume after the big spikes that we saw. Now, what I do expect to happen next is a pullback for BTC that will inevitably make a higher low, which is going to give a false sense of support for bulls. And what will happen next is possibly a higher high. But unfortunately, for those of you that have been watching the channel, you guys know that this is the textbook setup of a bear flag until finally that bear flag is broken and the price loses support, tests it again, and drops. I am not kidding, because that is literally what happened back over here. Our low on Friday, November 21st, to this low on December the 18th. If we draw it up here, you can see this exact thing happening, literally textbook. Comes up, breaks it, tests it, falls so much further. So I expect the same thing to happen for Bitcoin and Ethereum, but Ethereum has even more bearish signs here. You can see this dotted line right here, and the price failed to close above 2111. What's the deal? Why is that such a big deal? Well, if we go here to the weekly time frame, this price of 2111 is significant. Significant as in it's been a pivot high and a pivot low for the price of Ethereum going back all the way over here to April 2023, dare I say even over here to January 2022. It is a significant level, and it literally just got broken through like a bullet going through a wet paper towel last week. So looking at the current price of Ethereum, it is destined to drop a lot lower. But again, like Bitcoin, I'm expecting for a higher low, which means if we have higher lows and higher highs, we have another bear flag intact, which means it will give a false sense of hope before we lose it and we go lower. Gold. Now, a lot of you might disagree with me on this, but I'm actually very bullish on gold. I still think that gold has a good chance to shoot up to my target of $6,500, $6,513. And what's crazier is that if we just draw a Fibonacci retracement over here from this top in January to this drop here in February, look at where it gives us our 618. Right at $6,500. It literally lines up perfectly with that level. I'm not saying that this Fibonacci move is going to happen immediately. I think with all this chop solidation, it's going to take a little bit of time. But inevitably, I think gold is destined to move up another 30%. And that's my update for you guys.
Wow.
There we are.
Yeah.
TA courtesy of Aaron this week. Don't worry, folks. Lewis has not been fired. He is just taking a bit of time off. I think he said he'd gone to finalize the purchase of a warehouse to keep all his metal in.
Exactly, yeah. He's going into the physical metals trade, so he's basically going to take delivery of all that silver he'd bought at the top.
Yes, so don't worry, Lewis. I'm not sure if Lewis will be back next week, but he will be back soon. So our thanks to Aaron for filling in there. Wonderful as always, Aaron. We'd love to see your face next time. It's not the same, but thank you for that, and see you again soon. Okay, Nick, should we have a look at some tweets of the week?
Yeah, we've got quite a few. To be honest, this started off with like 20 different tweets because I was doom scrolling last week. I don't know why. I don't know. But there were a lot of good takes last week. But, gallows humor. Mm-hmm. This first one is pretty interesting.
Yep.
Yeah.
Yep. That's the timeline. It's summed up. Okay, next up, we have this from 0x Bags.
You know that
it's very good. There's some good photoshopping there as well.
Just that scene when they're basically just looking at he's driving, the speedometer goes over 120, 140. I should have sold at the top. I should have sold at the top. Dad, are you okay? Are you okay? I thought you were in profit.
We're going very fast.
Oh my God.
Okay, next up, we haven't seen enough of Vitalik recently. What's behind this?
So firstly, he came out of nowhere basically. He gave a very long post and as well as a blog post as well. But the TLDR is that he thinks that the L2 ecosystem it's basically the roadmap of the L2 growth of Ethereum is kind of dead. Which I think many people took issue with to a degree. He was also selling ETH last week, albeit smaller amounts. People were asking, what's going on here, mate? But irrespective that he came out of nowhere to basically throw shade at layer twos and the fact that he's dumping ETH, there's one thing that we can thank Vitalik for, and that's the fact that at least he's not in the Epstein files.
Absolutely. Well, I mean, dressed like that, they wouldn't let him in.
I mean, true.
Okay. Right. Next up, we have this from Platinum Sombrero: buying Bitcoin on the thesis that Trump may need to bail out more on Sun. So this is Eric Trump. So he's now got. Is this American Bitcoin?
American Bitcoin. He's taken them on a tour of their mining facility.
Okay. It did look pretty impressive. Yeah. Okay. Next up, we have this. So Ben Cowan is owning Twitter at the moment. He is going for it. He is not backing down from arguing with people on Twitter, and he's taken on one of the big names, the top G himself. I wish I could do an Andrew Tate accent. It's not easy. It's so difficult to do. So Ben basically just putting receipts.
Here we go, man, and he's bookmarking. I would love to know what Ben's bookmarks look like. I mean, if everything from the Cardano shill to Andrew Tate to the ISM.
He must be having to download them in a zip file, surely, by this point.
Yeah, exactly. Oh, bro.
He spends half his time just searching through his through his bookmarks. You keep going, Ben. You keep keeping those receipts. And we also have this one. Yes, so these are a list of possible Satoshi candidates all the way back to 2010. I mean, to talk about diminishing returns.
The fact that people are saying that, God, the fact that Craig Wright is now a better candidate than the likes of the current candidate shows you how far we've fallen.
We didn't know how lucky we were when it was Craig Wright. Yeah. Okay, so that is Tweets of the Week. And any dates for the diary this week, Nick?
Yeah, so as I mentioned, the delayed US employment report is coming out on Wednesday. There's 55K, which is the expected number versus 50K previously. Thursday, we've got initial jobless claims, 220K expected versus 231K previous. Coinbase earnings as well on Thursday. Mm-hmm. I don't know if you guys caught the Coinbase ad over there in the States on the Super Bowl. There were quite a few takes on that. It was interesting.
I think that kind of summed up crypto's image.
Let's just say the normies weren't too much of a fan. But anyways, Friday we have CPI inflation numbers, 2.5% expected versus 2.7% previous, and the core number 2.5 versus 2.6.
Okay. Yeah. All right. We'll just quickly check in with what's happening in the comments.
Oh yeah. Okay.
Guy, please get Thor's autograph for me. What's going on here?
I think that's was that drawn up just now. That's amazing. That is where we're going. That's where we're heading, bro.
That is. You laugh, but I mean,
we pivot from being pre-rich to now poor.
Yeah. Guys, I found us a nice new office. The good news is really good airflow, lovely sound.
It's a roof of technically a roof over your head. Not really,
not really, but
it's still a roof of some description.
So yes, all right, Crypto Steve-O, you can have Thor's autograph, but I'll only send it to you if we get to 100% likes next week. That's the deal. Okay, and Obi Wayne, great name. Isn't there also some beef going on between the American banks and crypto because the banks don't want you to stake stable coins and getting 4 to 5% interest?
That is true, exactly. Oh, there is a meeting coming out, I think, tomorrow, where they're going to be again discussing this related to the Clarity Act. Banks, the banks don't want the likes of Coinbase offering banking services, offering interest, because this would lead to deposit flight from the banks to Coinbase and other crypto platforms.
Yeah, this has been the big stumbling block for the Clarity Act. The banks, basically kind of circling the wagons. It is quite a nuanced argument because I think we've talked about this a little bit before, haven't we? It's not just mega banks like JP Morgan, but you've also got to think of kind of regional banks which are responsible for lots of small business loans, etc. But yeah, basically the banks don't want stablecoin issuers passing on the yield to stablecoin holders, because that would undermine the bank's current model, which is to lend it out, to take your money, buy US treasuries with it, get 4 to 5% or whatever it is, and pay you 0.03.
Yeah.
And pocket the spread. So obviously, there's a bit of protectionism going on with
that
the
was
banks.
more important. That was a very important question over there, Guy. At your bear market party, are you going to have an all-white Diddy party as well with Diddy?
Diddy has been invited, but so far my messages to him are going unread. I don't know. He seems to be otherwise engaged. Crypto's so bad, I bet on the Patriots. Yes, congratulations to the Seahawks, I think it was.
Yeah.
Look at me all up to date with American culture. And other people, Jason is saying Bitcoin on its way to 58K. We are almost at max pain.
We're getting close, guys.
I kind of agree. I think we are heading in that direction. Adam CPF, I'm going to put something nice up. Number 1 YouTube channel. You guys are the best. Thank you, Adam.
Cheers, mate.
I think we should probably.
That's the best place to end, man.
Note.
Yeah, end on a bang. End off on a good note.
Guys, thank you for tuning in. Let's hope it's a better week this week. I think we are still probably going lower. Maybe if not this week, then soon.
But end on a good note, bro. We said we're going to end on a good note.
Yes, we're the number 1 YouTube channel. You guys are the best. No, you guys are the best.
Going down, but it's fine.
Thanks for watching. We'll be back next week. Keep a lookout. Lots more videos coming your way across all our channels. Great to see you.
Cheers, guys.
This show is fueled by British dry humor and innate sarcasm. Glad you were able to talk Lewis off the roof. Don't call them altcoins, they're fault coins. We got metals crash before GTA Heights. You guys are specialty.
Pika pika, pika pika, pika pika, pika pika.